Hey there, happy Tuesday, it's me, Curiosity Trader. Hopefully having a great start of the trading week. Just going to do a quick video lesson for the YouTube channel. I'm going to go over pretty much how to identify stocks and to filter out randomness in the markets. Again, I always say, in every video lesson I do, all these are for educational only, okay? Don't take nothing as for stock advice. Always do your own research, always do your own due diligence, okay? If this is your first video, welcome. Hopefully you subscribe and hopefully you learn something from this video. Again, I try to make this as clear as possible. I'm learning about trading. I'm not consistent yet. I've been in the markets for roughly 8 years. I've traded, yes I have, but again, this business is not for the many. 95% fail, and over the course of the entire 8 years, I pretty much mastered the art of how to stay in the game, in a sense. And stay tuned for that video. I'm going to drop one soon, why 95% traders fail, and stay tuned for that one. But overall, some stocks to watch for this upcoming week and ones I'm watching. Again, always remember that 3 out of 4 stocks follow the overall market, meaning that I always say the best time to buy setups and buy is whenever the moving averages are surfing, rising, right? But now whenever they're sloping downwards, like in this action right here, that's the time to play great defense. And that's one of the key points I want to make here. Okay, you don't have to trade every day. There's no need to trade every day. And before I start this is a very popular post today. 65% of young men day trading stocks feel like failures. Yahoo Finance. I would even argue it's even higher than that. Okay, day trading is not worth it in my mind. You can make money. That's probably the quickest way to make money, right? But again, you're here to develop an edge. You're here to develop longevity, okay? To get to the big league numbers. Day trading is not scalable, right? And you can make day trading, you can make your first million or so day trading, but like whenever you get past like the $20 million mark, you have to go up to higher stocks. Because then you're going to be moving the stock with your size, okay? But I'll save that for a future video. But day trading, as I mentioned, you're always fighting near your entry. Now, it's different on plays like today, like we had on PFSA. Like whenever I see a stock like this on my day trading scanner, I will trade it. But this is different. This is pure momentum, right? I am classified myself as a momentum trader. I rarely day trade. Very rarely I do. Like this is my day trading scan right here of all the top stocks that ran today, right? But as you can see, again, the market, there's so many ways to make money in this business, right? I'm not going to sit here and tell you that my strategy is the only way. No, I'll be lying. Wherever you are, right? But I'm just showing you what I am good at. I know myself as a trader. I don't do well where like I'm always fighting near your entry. And that's a problem with day trading in my mind. Is like I have a full-time job, right? And the best time where I'm able to see the markets is the first 15 minutes, sometimes hour of the day. I'm looking for a stock, which I'll go over the setups which I look for, and I can hold them and not having to worry with these high volatile moves with these day trading stocks too. This is a good setup. This is a picture perfect opening range high breakout. This is my bread and butter I always talk about on this channel. Again, you focus on the stocks that make the big first initial move, right? And they go sideways. In this case, it was one day. And I completely missed it. It was my fault. But opening range highs. And this is purely a pump play. There's no news on this. It's just a low float runner, right? But remember what I always tell you, okay? The shittiest stocks often run the highest. I'll say it one more time. The shittiest stocks often run the highest. You don't have to say, I see a lot of people, you know, and number one, random thing out there, you don't want to short day one of a move, you know, because you're gonna get blown out of the water here. There's no reason to short this, you know. Obviously now, right, most of these do give back their gains, but I've seen numerous times like shorting on day one of a move like this, you're asking to get blown up. You're asking to become, you're gonna become liquidity in a way. And it's just, I noticed, I've tracked stuff, don't short day one of a mover like this because you are asking to get blown up, you know. And this is 5-star, right? I will look for plays like this, but for some reason today I missed it. I don't know why. I had a line on there, right? But for some reason yesterday I didn't watch it. This is very similar to what I'm watching for tomorrow, XOS. Even though it's faded, I'm still watching it for the rest of the week. They had a news with the Navy defense, some drone contract win. So I'm watching it, but always remember, like, look left, right? And even like going back to like day trading versus swing trading or whatever you're trying to do, you always want to put the stock into overall context, right? And I've always noticed, like, the day trading, right, you're taking advantage of that intraday time frame. Like on, for instance, like I just mentioned, this ticker here. Like, most day traders are in and out, right? This is a good move. It's high day breakout. Hindsight's always 2020, right? Even the VWAP, hindsight's always 2020. But like my bread and butter are like these plays that have been running lately, and like the prime example of one is like QMCO, these earnings winners, EPs. These are just pretty much more straightforward to me. And this is, in my mind, the best pattern to trade if you have a full-time job, is these earnings winners. Because I define an earnings winners as a reaction. You want positive growth. You want positive year-over-year growth, and you want a positive outlook. What do I always tell you on the channel? Okay, as a trader, you want to buy something that has fuel. You want rocket fuel. You don't want to be in something like, for instance, I always see people mention like Facebook. That's not Facebook. Or what is it, Apple? Apple. I can't even. Damn ticker. I mean, Apple's a good company, right? But again, we always talk about on the channel, you want a stock to be moving, right? You want a high ADR setup, right? And I'm not an investor, I'm a trader. And I'm not saying this is a bad stock to trade, but you're trying to grow your account. You're trying to grow your account, I assume. And again, day trading is very favorable if you have a small account. I'm not saying don't day trade. Again, my account is small as it is. I don't ignore these runners, right? If I see a setup, especially on an intraday time frame setting up, I will take my shot, but I'm not looking for them anymore. It has to literally, the best trades in my life literally yell at me, if that makes any sense. Like, you should not be looking for a trade, okay? If you're a beginner, you're not going to understand this. You're not, because you don't know you don't know your style in a sense. But as you develop into a trader, okay, you're going to understand something. The best thing to do is sitting on your hands. As Jesse Livermore said, it was his sitting that made him the most money. And that's not sitting in a position, it's sitting on your hands, not trading. You do not have to trade every day. No one is holding a gun to your head saying you have to trade. You do not have to trade, okay? And it's fine not trading. Learn, okay? I'm not saying to ignore the markets. I come to the markets prepared, right, with my watch list right here from some potential opening range high plays and flags. If none of them meet my criteria, I do not trade. Yes, sometimes I look at the pre-market gappers on my penny stocks and day trading scanner, and of course, like if there's earning EPs gapping up, but like I'm not looking to trade because I don't need to trade. Do you understand, right? And that's just where I'm at. Like, even if you have, like, let me show you, for instance, like what I look for. Let me see. These earnings winners have been ideal lately, and again, you want a stock that really has been neglected over a while and just continues to go higher. And a past example, well, RCEL, this is a biotech, 5-star, small account edge, 5-star, 5-star, 5-star. We talk about this on the channel all the time. This one and HTFL, same type of setup, exact setup off earnings. But the thing is with biotechs, these are often the best ones because like they release data right here off earnings as well. And like, you know, they're not going to release any more data. They met their primary endpoints, and it's fuel, right? It's a positive outlook. Although the only thing about biotechs I would be wary of is that they tend to raise more money as an offerings and dilution because it's a biotech company. And most of these drugs which they are producing will likely not work in the end, sadly. But they need money to function, therefore they raise money. They need liquidity, right? So it's in the best interest for these things to go higher. I always take note of that. But like, this is a 5-star setup. And again, it's the same premise we talk about all the time. The big first initial move, right? And this sideways channel, let it build. The more sideways it goes, the better. And you want to buy opening range highs just as it's breaking off the range break. And you hold it for a couple days and you sell it really. There's two ways of doing this. I use the hourly to sell. You can use daily if you want. But with a small account, you really want to grow your account. You don't want to try to go for the big moves, in my opinion, yet. Like, if you have a small account, your goal is to grow it. You know, every win adds up, okay? Don't get greedy. But 5-star, and again, low of day is always stop on this, low of day. And again, we talked about this as well on the channel. Average true range, you don't want to buy it unless it's below the ATR, and don't have your stop wider than that, okay? And so that's a 5-star setup. Like, this is my earning scan, earning EPs that I'm watching, you know, Duet, for instance, Duo Technology. Positive earnings, positive growth. This is a recent runner from the past. Like, look left. This has gone off earnings in the past, right? Even though it's not done well, it's on radar, because look at the volume. Again, always pay attention to volume, okay? ADR is roughly 8%. It's setting up very nicely. I'm watching it. Let it base. But I've noticed most of these have not been performing well. Most of these have been fading. Like, for instance, Amazon, I was kind of disappointed. It had good earnings, right? But it's faded. Same thing with, like, Blaze. This is setting up well. It's basing really well. And the more it bases, the better. I'm just watching over $21. Like, these are setups, right? Because this is something you could develop a methodology around, right? Where, like, on these penny stocks I mentioned earlier, day trading, you're pretty much in the moment, you know? Which I've only traded in the moment, like, day trading wise, like I mentioned, like, and afternoon high day breaks are pretty much golden. Those are pretty much a given, right? And like the one I just showed you earlier, like, that's my bread and butter on these penny stocks, right? If I see one setting up, I check my scans throughout the day. If I see it setting up towards afternoon, like, this is pretty much textbook right here. Okay, you call this the ABCD pattern, right? You have the first initial spike in A, the B, the C, and the D. You really want to buy it as it's breaking off this VWAP, right? This is the bread and butter. This is probably the only setup I watch. I call it the afternoon high day break. Okay, very high odds of a setup to work, right? But that's where it differs from these swing trading type of plays, because I've noticed, right, that the best ones take time to develop, right? The best ones take time to develop, like SMCI, right? Off earnings. And again, always look left. I mentioned the best stocks that run are the ones that ran in the past. Nice earnings, good sector, computer hardware, right? And or semiconductor theme. And everyone's just getting worried that it's basing, but look where it's basing at, the 10-day. So let us do a thing. Just watch it, you know? Just watch it. And I did get chopped off today on one of them, on QMCO. Was it QMCO, I think? Yeah, QMCO, I got faked out. This is a good move. This is a good setup, right? And again, the basic premise, let it base, but I got too eager. I got long off this opening range high break, and it stopped me out. It stopped me out. I pretty much got long. You can see it here clearly. Off the open, it had a nice bounce, right? And I was thinking it was going to go off a range break of $26, which we got, you know, but again, low of day was stopped. But of course, I was somewhat chasing this, right? I got it at pretty much 25.40. I was chasing it somewhat, gave it time, but I pretty much I cut it below 24.80. I didn't held the entire day. I sold it, and sometimes that happens. That's trading, okay? Again, get used to losing. Get used to getting stopped out. And again, I want to say one more time, if you get stopped out and if the setup reemerges, you have to take the trade, because the market does not give a shit about anything, okay? I'm watching this one for the rest of the week. Let it develop. Iowa, 5-star continuation. Earnings, biotech, right? Look left. This has gone before off earnings. What we talk about? Earnings day, consolidation, sideways, right? And range break, okay? And remember, always lock in gains. I'm not going to sit here and tell you these are long-term holds. Now, your goal is to trade. Your goal is to have proper entry, exit points, and manage your risk and grow your account, okay? These are not long-term holds. Some of them are, but some of these, again, your goal is to grow your account. I'm just showing you what works for me. 5-star. And with this, you know, you don't want to buy it now. No, you want to buy it just as it's breaking off that range break, because there's no edge buying it right now. So, like that one's 5-star. Let me see another one. NBIL. That's another one. Well, NBIS was one that pretty much stopped a lot of people out. Again, we talk about linearity. Look left. This has gone linear before. Had nice earnings. And again, the overall markets perhaps are bringing this one down, but I'm still watching it. Ideally, it's gonna base. It reminds me very similar to SNDK before it went on that monster run. Ideally at a base, you know, for a couple months or whatever. Then had that test of high of day. But again, who knows? It's a much higher price stock. Now I don't really have that much buying power for that one. But this is my earnings scan, all the recent earnings winners, you know, and every day I add them. This is one more, STIM, another recent biotech company, and look what's doing really well. Again, it's making that sideways price action. Of course, the long-term chart is shit, so I always take that into consideration. ADR is very high, so I'm watching it, over 340 to say. But that's what you have to do. You know, I keep a list of recent earning winners on a backlist, and I go through them every night to see what they're doing. Shop was one that let me down. It tried breaking out. You can see right here, right? Clean setup, right? Basing, but it pretty much just failed, right? But again, all these, like, I'll show you an example of what I do every night. And Wayfair, right? This is a bad one, because like whenever it gaps up, you want it to gap up and hold. This one gapped up and fade, so it's not a 5-star in my mind. If it was stronger, it would have gapped up, base, and continuation, right? And I always bring up the past a lot because the past does matter. Like on PL, for instance, the past 2 earnings, even the first one here, the first earnings, right? Gap up, and look what it did, the linear move. Premise, same deal, months of basing, well, it's 2 months of a base. 2 months of a base. Then we had that other gap up, and always pay attention to volume. Always pay attention to volume, right? Always pay attention to volume. The volume. And same premise, gap up, pull back, and pretty much did its thing. You know, you always want to find it when it's basing just like this. And even, again, the best stocks move in stairs. Set up another setup right there, then what's that linear move. That's the basic premise of this EP setup. It works well on biotechs, works well on mainly earnings, right? But of course, if the stock is neglected, it will work to a T. And Ring, another perfect example. This is a pretty much same deal. Earnings EP, look left, big base. Again, this is a 5-star one, 5-star setup. Earnings, right, from prior, but it didn't have the same reaction we're having now, but it made a big base for months. Earnings, gap up over the resistance. Gap up over this resistance, and that's when you want to buy, the first day, right? But as I mentioned, the best ones are going to go right away, right? But they are also going to offer numerous entries. Don't think if you miss it on the first day that you're not going to be able to get it. No, you are. Just be patient. They're going to pull back, right? They pull back, just how you saw here. They develop a range, and that's when you pick out your spots and you buy opening range highs. Okay? Now's not a buy, because it's pretty much on the higher that they go, the lower the risk reward is on the trade. The higher this go, the more away from the entry point, the ideal entry point, right? The odds are not in your favor. So you really want to buy it first EP day. But other than that, the best ones offer numerous setups. They're going to offer a lot of flags on their way up. Airbnb, 5-star. I'm watching it for the rest of the week. Setting up very nicely. Positive growth, earnings, year over year. And it gapped up over this nice big base here. And look at the volume. The volume's not that large, but it gapped up over this monthly, even a year worth of a range. So I'm watching that one. This is the action you want to see here. You know, the big gap up, right? Big gap up, and the sideways action right here. This is 5-star in my opinion. Now it's just a waiting game. Over 185. If not, who cares, right? I don't know. I'm just watching it. But this is the basic premise of this one setup that I watch over and over again. Even QNST setting up very nicely. This one differs a lot from the one I showed you earlier. Which one was it? The one that was fading. I think it was Shop. Not Shop. Which one was fading? The one I mentioned earlier that was fading. Even Amazon was fading. But yeah, Amazon. It differs a lot. Because usually with these are going to bounce in some way. I don't know where, but most of them, it's like a downward flag type of pattern. They're going to find a bounce to go on. Then you wouldn't, that's a different pattern though. You wouldn't go for that. But like on the one with, the one I just showed you, QNST, I'm watching it because it set a nice green day right here, which means there's some buyer in there. So I'm watching over $21 odds, you know. But that's what I do. I have a separate scan for earnings, and I create a watch list, and I watch one. Like Boxel, for instance, is what I'm watching for the rest of the week. This is positive recent earnings as well. I believe so, yes. Recent earnings. Although, again, everything's about a reaction. This is a piece of shit company. This has gone supernova in my past, because I remember I've been in this business for about 7 years now. This has gone supernova a lot of times. I'm only watching it for number one reason. It's a potential liquidity trap. I already went over what that was, but I'm watching that one for that only reason only. And again, look how it's building these ranges here. Very, very tight ranges. I'm not saying it's gonna be something like X, like this one, for instance. I'm not saying it's gonna do this on, although this is textbook. I was dead on with this one, but I'm not saying it's gonna do anything like that. I'm just saying that always understand that shit stocks can run a lot higher than you think. So those are EP's earnings, okay? My bread and butter that I do over and over again. And sometimes you're gonna have a high fail rate if you try to get it off the open. But like, again, as I mentioned, you can always get back in if it sets up. But other than that, those are really the ones I'm watching. XOS I'm watching as well. Had a recent contract when I mentioned. I was watching it, but it likely will fade because look left, it has faded before. It tried, but most of these stocks sometimes do go again, you know, so always keep these on a list. AMLX with a 5-star earnings. Or biotech news, they met all their endpoints. So WTO, I'm watching. This is a short squeeze as well. Again, as I mentioned, right, the setup, high day break, 5-star. I'm just watching this one because you never know. The best longs are often the best like short squeezes in a sense. So it's like the reverse short, you know, but that takes time to understand what I'm saying. But you have to understand, think of a mind of a short seller, you know, like you shouldn't short this stock on day one of a move. That's what led this to go to the high of $42, right, from the low of $9 or whatever. But I'm watching it over $40. This could squeeze even more. Otherwise, I'm not going to pay attention to it. But yeah, other than that, YYAI is a different type of setup. It's pretty much a mean reversion long. It's reversed to the mean reversion short, right? So this is a neglected stock. I'm only watching because it's a number one. It's a recent reverse split. The thin is very low, so it could do something crazy. But I'm watching it. Beyond Meat. This another same thing. Piece of shit I'm watching. But that's really all. I'm managing the. I'm just watching the other ones. Like the main one I'm watching is Airbnb. Chime is one I'm watching, but the ADR is very low on that one. But yeah. Again, the market's not that well right now, you know, everything's just setting up very nicely. And again, as I mentioned, you don't really have to force yourself to trade. Just focus on high odds setups, right? And just understand that it's going to work if the market conditions are in your favor. And you don't have to trade every day. You know, there's no need to trade every day. I don't care what anyone tells you. If they say you have to trade every day, run away. Because most of these earnings winners, in a good market, right, they would go. But I've noticed a theme lately is that they're all fading. They're all fading, which is showing you something. It's showing you something. But the ones that hold up, those are going to be the ones that lead when the market turns around, right? XHLD, I am watching this one for sure. A clear trend change today, but not yet. Sub 6. Otherwise, if this bases, we can see something crazy. But yeah, that's pretty much all I'm watching. SNDK, a nice, pretty much bounce short. This is the highest probability setup in any trade, really. This dead cat bounce type of pattern. But I'm not going to talk into that. But yeah, that's really all I wanted to talk about. And yeah, other than that, stay tuned for a special announcement. I'm soon going to be opening up a Discord server. I'll do a separate video on that. But the main goal of this is to just grow a community of traders. Okay, that's the main goal. Is to grow a community of traders that want to learn and grow amongst each other and build a wonderful community. I'm not trying to sell service. I'm not trying to pump any stock. It's to promote transparency and to promote a good trading where we all can network. All right. But other than that, I will see y'all next time.